My name is Darrin Mish, and I'm an attorney. My practice for the past 10 years or so has focused on helping people with IRS problems get their lives back. I have a secret to share with you as well. I once had an IRS problem, and when I went looking for help, there wasn't any. I had to learn how to do it myself. Now fortunately, I had the benefit of a legal education behind me, and I made it out alive. But that got me thinking, if I had trouble figuring this out, then the average taxpayer must find this really frustrating. That's when I decided to learn how to help people like you solve their tax problems. Now, getting a wage levy release can be tricky, but I wanted to give people an inexpensive and easy way to get the information that they needed to try to get their wage levy released on their own. So I created this video. The video is not intended to be legal advice, and everyone's situation is different. If you want legal advice, you should contact a lawyer, maybe someone like me. If you have trouble doing this on your own, give my office a call toll-free at 888-438-6474. That's 888-GET-MISH. I represent clients all over the United States. Make sure to let us know you have a copy of this video, and we'll even make sure that you get a special discount equal to twice what you paid for it. So sit back, relax, and watch this simple video on how to get your wage levy released. I wish you the best of luck in ridding yourself of your IRS problem.
Now there's several keys to your wage levy release, and I'm going to go ahead and go through this short video and give them to you. The first is we're going to learn the requirements you must use or that you must satisfy to obtain a release. We're going to learn how to get your wage levy released almost immediately after the IRS agrees with you. We're going to learn how to get your tax return information from the IRS even if you haven't filed for years. We're going to learn how to get your returns accepted by the IRS almost instantly. We're going to learn what form the IRS will require you to fill out ahead of time, where you get that form, and how you fill it out. And we're going to learn what documentation you should have available when the IRS asks for that information. And lastly, we're going to learn how to appeal if things still don't go right. You know, having a wage levy can be one of the single most devastating things that can happen to a taxpayer. It has an impact on your relationships. It has a very large impact on your financial life, obviously. There is actually a table that the IRS uses in order to determine how much money that you're entitled to keep after a wage levy has been executed. That is actually a publication 1494, and it comes out, it's updated every year, and there's one on the IRS website, and we'll show you how to find that in the future. But hopefully you're not going to be subject to the wage levy for very long, because we're going to go ahead and do everything that we can to teach you how to get your own wage levy released. Now, before we go any farther, I wanted to point out that IRS wage levies have been on the increase for years. As you can see in this slide, that as of 2000, there was fewer than 1 million wage levies in the entire United States. And things have really ramped up over the past decade or so. And because the government is running a large deficit and there's different financial burdens placed upon the government that they need to pay for. And so you can see now that we're approaching the 4 million mark in wage levies every year, and that's a pretty impressive number. If you're watching this video, odds are that you're one of those taxpayer victims, so to speak, and so that's the other purpose for this video. There's been a tremendous demand for this type of information. Now, the first steps that you're going to use to stop your IRS late wage levy and to get it released is you're going to get a copy of the actual levy notice from your employer. And the reason for this is that it tells you what tax years are in question or subject to the levy. It tells you how much you owe for those particular tax years. And it tells you which office or which department of the IRS has actually issued the wage levy and how to contact them. The wage levy is typically a 4-page form, and starting on page 2, I think pages 2, 3, and 4 are all the same. There's some there's some information that you need to complete and return to your human resources department or your payroll department, whoever it is in your particular job. Now this information is who your dependents are and what their relationship is to you and their social security numbers. And that's because, according to that publication 1494 that I just referenced, the IRS will determine how much of your paycheck you get to keep depending upon your filing status and the number of dependents that you had. Just to give you an example, on the publication 1494 that I'm looking at presently, for a single person who got paid bi-weekly, the IRS, you get to keep $344.23. Now, if that same person was filing jointly with 4 dependents, you would get to keep $957.69. So you can see it can make a tremendous difference to go ahead and fill that out. It's very easy to fill out. It's very easy to go ahead and return it to your Human Resources Department. But in my experience, most taxpayers don't do that and therefore suffer. It might actually take a pay cycle or 2 or more to get your wage levy released. So this is just good, cheap insurance to make sure that you maximize the amount of your check so that you don't lose any more money than you absolutely have to. Something that's really very interesting also to note is that if you were to happen to look on the publication 1494 and you don't make that much money, in other words, after your taxes, insurance, child support, garnishments, that kind of thing, you don't make more than is the allowable amount on the publication 1494, then you're what we call levy proof, and the wage levy doesn't really impact you that much. But that's not all that common. Here's an example of what a wage levy notice looks like. As you can see, it's a Form 66 or 668-8WC, and in this particular case, I wanted to show you that the 1997 tax year for this particular taxpayer is the only year that was subject to the levy. You can also see from this slide that this gentleman only owed about $685 on that particular tax year. So there are sometimes instances where it makes a lot more sense to go ahead and pay off the levy than it is to try to have your wages continue to be garnished. So in this particular case, this person could go down to the IRS office or just mail the check in for that total amount, and that particular wage levy will be released at that particular time. Now, it's not uncommon for the IRS not to wage levy on all of the tax liabilities that you have, because there are different procedures and processes that the IRS has to go through before they can actually issue that wage levy notice. And so for this particular taxpayer, the only year that was eligible, so to speak, was 1997. But you can also see in the upper left-hand corner that the IRS address says ACS support in Kansas City, Missouri. And then if you look to the right on the top, you can see that there's a toll-free number listed. It's 1-800-829-7650, which also corresponds with the Kansas City Wage and Investment ACS office. Now that doesn't mean when you dial that number you're actually going to speak to someone in Kansas City. You're going to be speaking to someone at a call center somewhere around the United States. But it is important to note who issued the IRS levy, so that, and we'll show you how or why in a minute. Just remember that you're going to need the name and fax number for the person at your job, whose job it is to get the wage levy release, and you're going to need that in case you're able to communicate with the IRS and successfully convince them to release the levy. The IRS will try to tell you that the only way that they can release it is by mail, and then that'll take somewhere between 2 and 4 weeks. And what does that mean to you? Well, that would mean to you that you would lose a paycheck, 2, 3, 4, however many paychecks. Well, I'm here to tell you that that's not true, that they can issue a wage levy by fax, and they do every day of the year, or every day they're open at least. And so if an ACS employee or an IRS employee tells you that they cannot fax a levy release to your employer, you need to gently and politely insist that they do so, or that they have the right to do that, and that they should do that in your particular case. So who do you call? Well, you need to look at that wage levy form, the levy notice form that I just referenced, that I just showed you, and you call the number on that levy notice. Now, if you're dealing with the automated collection service, kind of like that levy, then you're going to call the number to the right-hand corner. If you're dealing with a revenue officer, it's going to be someone local to your area. If not immediately local, somewhat closer to your office than your typical ACS letter. Now, ACS stands for the Automated Collection Service. There's basically 2 divisions of the Automated Collection Service. There is what is called Wage and Investment that I referenced just a minute ago, and that's based out of Kansas City, Missouri. Now, wage and investment means essentially people whose tax problems emanated from underwithholding, not having enough tax withheld from their paycheck from their job, their JOB, or perhaps investment income sort of tax problems, like early withdrawals from 401ks and so on. In Bensalem, Pennsylvania, you have a different unit of the automated collection system, which is for small business and self-employed people. And primarily, they focus on people who are self-employed that get 1099 income and small businesses like subchapter S type corporations. Basically, you can think of it as this: if you're dealing with wage and investment, if your problem came from not having enough tax withheld from your paycheck or from retirement sort of early withdrawals, and if you're dealing with small business self-employed, is because you received a 1099 or are otherwise engaged in your own business. Now, a revenue officer is a little bit different bird. The revenue officer is a local person assigned to your area who works cases in the field. What that means is they're the type of people who come out and knock on your door and say, "Hi, I'm from the IRS and I'm here to help." They usually carry a silver badge, or it's actually a lot of times a plastic pocket commission, and they do not carry weapons. They do not have arrest powers. Incidentally, if you ever get a visit from two IRS employees, both carrying gold badges, packing heat, in other words, wearing pistols, then those are typically from the Criminal Enforcement Division of the IRS, Criminal Investigative Division of the IRS, and they're there to investigate whether or not you might have criminal liability in some way or otherwise interested in speaking to you as a witness in some sort of criminal investigation. I would submit to you that if those people come to your house or your place of employment, that you do not want to speak with them under any circumstances without a lawyer present. It's a very rare thing, and it's not something that you need to worry about. Incidentally, many taxpayers are under the assumption that they are subject to criminal charges and or prosecution for the failure to pay their tax bill. That is almost never the case. There are criminal charges that can be placed against people who have failed to file, or who have committed fraud in filing, or evaded taxes in some way. But the simple act of failing to pay your taxes is not a criminal offense, and normally you don't have to worry about any kind of jail time. But back to revenue officers. Revenue officers can be harder to deal with than ACS, and ACS is pretty darn hard to deal with. And that's because revenue officers are there to collect as much information as they possibly can from you in order to solve your case. Solve your case in the way that they want to solve your case. If you've been issued a final notice of intent to levy, which is a document that is necessary in order for the IRS to collect from you, you actually have a right to file what's called a Form 12153 for a collection due process hearing, which is really an appeal. And we'll get into that at some length later on in this presentation. And you can download that particular form from the IRS website or from our website at getirshelp.com/DIY, which stands for Do It Yourself. If you deal with a revenue officer, by the way, you're going to want to take all of this information in terms of obtaining a release and just apply it to the revenue officer scenario. In other words, that's who you're going to communicate with. Their phone number, which will typically be a local phone number to your area, will be on the levy notice, and you're going to call them. You're going to call them directly and speak with them directly, unless, of course, you have a power of attorney and an attorney, a CPA, or an enrolled agent that you've hired and paid to deal with the levy issue yourself, and otherwise you're going to call the revenue officer directly. Now, some of the tricks of the trade in terms of getting your levy released with ACS include calling them, and if you don't feel like you're being treated fairly, you can go ahead and hang up. Now, I wouldn't be blatant about it, and I wouldn't be rude about it, but the type of trick that I typically use is I say, a lot of times you can tell within the first 30 seconds whether or not you're going to be able to get along with this person and whether or not you're going to be able to do business with them. So if you feel like there's just no way that this is going to go well for you, what I would typically do is say, "Hello? Hello? Man, I hate cell phones. I can't hear. I guess I'll just have to call back." Click. And that's in fact what you're going to do, is you're just going to call back at the same number that you just called, and you're going to give it another try. Now, there's dozens and dozens of call centers for ACS around the country, so the odds of you actually getting that same rep back on the phone are somewhere between slim and none. In almost 10 years of dealing with this type of problem myself, I've never spoken to the same ACS representative more than once. So the odds of you getting them back on the phone immediately is just infinitesimal. It'll never happen. The other thing is, I'd like to tell you that you're going to call that toll-free number and you're going to get someone on the phone, without a long wait, but that simply isn't the case. If you're on the East Coast of the United States, I would urge you to call late in the day, and the reason is that you're much more likely to get a West Coast ACS representative on the phone who has not been working all day and who is not suffering from snow and ice usually in the wintertime. You usually obtain someone or get someone on the phone from Fresno, California, or Seattle, Washington. And I don't know why, and this could be my West Coast bias because I was born and raised in California, but it seems like people on the West Coast are just happier and easier to deal with, at least in the context of getting wage levies released. So that's important to note. So they're open from 8 a.m. Eastern Time to 8 p.m. Eastern Time. If you're in the Midwest or the West Coast, then you're pretty much okay. Again, calling late in the day might not be a bad strategy, so you're going to have to give that a try. You may be on hold for upwards of an hour, so you might not want to call on a cell phone that doesn't have a full charge. You might want to allow yourself plenty of time to be able to wait on hold before they call you. Another trick of the trade is you have about 15 seconds to say something that's pleasant and nice and doesn't have anything to do with taxes. I know this is a cliche, but I will often talk to them about the weather. Now that's a little dangerous for me because I'm actually based in Tampa, Florida, and the weather here is pretty nice most of the time. So if I'm speaking with someone in Philadelphia and it's January and I talk about the weather, it's probably going to irritate them in some way. So what you need to do is just be quick thinking and try to think of something that you can engage them about that doesn't involve your situation and see if you can establish some baseline rapport with them right then and there. If you can't, you can't. But if you can, it can really go a long way to helping you out. We're going to talk about what will the IRS actually want from you in terms of documentation, paperwork, and data before they'll release the levy. It's a funny little cartoon. They want everything, don't they? Now, you need to be compliant with all of your tax returns. And what that means is, for the past 6 or 7 years or so, you can't have any missing tax returns. If you do, there is no way that the IRS is going to release your levy. Now, let me repeat that because that's really important. If you have any missing tax returns, you are not going to obtain a wage levy release. Period. Not going to happen. So if you happen to know, hey, I haven't filed tax year 2005 and now it's tax year 2008, I just sort of skipped that one, you shouldn't even bother wasting your time calling ACS to get a wage levy release. It's not going to happen. So what you would need to do then, we'll go into what you do then, but basically you're going to try to get a return prepared as soon as you possibly can, and if you don't have records, that could be a problem. They also require that you are current with your tax filings and your estimated tax payments. And what that means is, if you're a 1099 employee or self-employed and otherwise a self-employed individual, you have to make what are known as estimated tax payments. Estimated tax payments are due quarterly. You can see the form. You can download the form at irs.gov, and the form is called a 1040-ES. The ES stands for estimated tax payment. The IRS will not consider you current unless you've made at least 2 quarters worth of estimated tax payments. Well, how do I find out how much my estimated tax payments are supposed to be? Well, the rule of thumb is you're considered current if you have paid at least 90% of last year's tax liability. So let me give you a hypothetical. If you owed $10,000 in the last tax year, then you need to pay 90% of that, which is $9,000. If you divide $9,000 by 4, then each quarter you are to have made $2,250 in estimated tax payments. Now, a lot of people have trouble with numbers that big. And so what I would encourage you to do is go ahead and divide that number by 3. That's $750. And that tells you I should be paying $750 per month to the IRS in the form of an estimated tax payment. Now, if that $750 number still really concerns you and it doesn't seem like that's manageable, I'm going to encourage you to divide it one more time by 4 so you can get your weekly amount down. That's $187.50 every week. If you that number still seems too big, what you can do is again divide it by 5, and that says that you need to pay $37.50 5 days a week. You have to pay $37.50 towards your estimated tax payment in order to be considered current with your tax payments. Now, it's really important to make your estimated tax payments, because if you don't, you're going to have this problem for the rest of your life. There's that old saying, the definition of insanity is doing the same thing over and over again and expecting a different result. Well, don't be insane. You're going to have to figure in what your proper amount of estimated tax payments are, and then start making them. If you don't, then it is in fact the definition of insanity. A lot of people that I meet with actually don't make nearly as much money as they think they do. So if you're a carpet layer, for example, and you're making $20 an hour, but you have to withhold your own tax, then you're not making $20 an hour, are you? You're making much less. Now, employers will often actually treat their employees/contractors as contractors because it saves them a lot of money. They don't have to pay the payroll taxes, which is the Social Security and the Medicare, on a self-employed individual like they do an employee. So it's a way of shifting the burden from the employee to the contractor. Now, if you're the type of person who's never going to pay your taxes, then I guess it doesn't really matter. But if you're listening to this video, or watching this video rather, then you've probably experienced a wage levy of some sort, and it's impacted you. And so now's the time to either leave that job or start to get current so that this doesn't happen for the rest of your life. There's a cardinal rule in this business, and that is if you have to decide between making payments on old liabilities or new liabilities, you always pay your new liabilities. And I know that doesn't necessarily make sense, but if you think about it, it really does. Let me explain. If you just continue to try to catch up on your old liabilities, then you'll never be current, and you will always have a new tax liability waiting for you around the corner. And that's a problem. I call it cutting the head off the snake. If you don't pay your new liabilities, your current obligations, then you cut off the snake's tail, and it continues to slither through the grass. But if you actually pay your new obligations, your current liabilities, then you cut the head off, and the tail actually withers and dies. And that's what we're looking at here. You need to pay your current obligations before your old obligations, or you can never extract yourself from the jaws of the IRS beast. That's really important for you to know. Now, I wanted you to know, too, that all old tax forms can be found at irs.gov. Let's go there real quick and see. Now, this is the IRS website, and as you can see, on my computer, I've actually visited this link here on the left-hand side. I'm moving the pointer back and forth on that link, and it says More Forms and Publications. If you click on that, it'll take you to this page, and it says Download Forms and Publications by Form and Instruction Number, Publication Number, and so on. You're going to want to go ahead and click on this link right here that says Previous Years. When you click on that link, it'll show you that there are tax forms available for 1990 all the way through 2006. If you don't see it there because you're looking for a 2007 or even a 2008 tax return or some later year, then that's because that's considered a current form, and you're going to want to look in that Current Forms Index. So you would click on the form and instruction number, and as we scroll down here, these are considered the forms that are current. Now you can see here in this left-hand column, those are the revision dates. So for example, this one right here was revised in 01 of 05, which is January of 2005. And so all these forms are the most current forms available. You see in the one that I've just highlighted there, that form was revised as of January of 2008. Now, if you find yourself with tax returns that are not filed, then what do? Well, you either prepare the returns by yourself using the resources that I just showed you by downloading the forms from the IRS and preparing those with a pencil or a pen and sending them in, or you can actually sometimes obtain tax software to do that job for you. One of the helpful hints for where to obtain old tax software is try sites like ebay.com, and we've actually purchased old software there going back into the early 90s. So It's really cheap too because most sellers of software want to sell current software. They don't want to sell old software. Now let me caution you about something there though. Old software doesn't always run on new computers, so that's, it's kind of a buyer beware situation, so you're going to have to think about that. Now, if you find yourself on the phone with an IRS agent or an IRS revenue officer and you believe that the tax returns have already been filed, you can ask them if you can fax them to them. They're often going to, and what they'll do then is, if they don't show that a tax return has been posted, they'll file that return as an original return. Oftentimes, when you speak to ACS, they will advise you that you will need to mail the returns in to the normal service center where you typically file them, and I'm telling you not to accept that as an answer. If you mail the returns to a service center, it will take 6 to 8 weeks for that service center to process your return. That means that you'll be suffering from your wage levy for 6 to 8 additional weeks, probably longer. So I'm going to go ahead and tell you, I can tell you a helpful hint on how to get this done. You're going to take your return to your local Taxpayer Assistance Center. What's that? It's your local IRS office. It's that office that you drive by sometimes and you avert your eyes because to actually look at it just brings too much pain and horror to your heart. So we'll show you how to find that in a second. But you're going to take the original returns with an exact photocopy that's also been signed. So in other words, let me back up. You're going to sign an original return in blue ink. You're going to sign and date it. If you have a spouse, your spouse has to sign and date it too. Then you're going to take that original copy and you're going to make an exact photocopy. So your photocopy is exactly the same as the signed. In other words, don't bring in an unsigned photocopy. That's not an exact copy. So you're going to bring those 2 copies to your local Taxpayer Assistance Center and you're going to hand them over the desk or through the window to the person there that's there to deal with this sort of thing, and you're going to ask them to date stamp your return. They will go ahead and date stamp the exact copy, and you're going to get that back. Now I have a little secret to speed up the process. Once you get the return date stamped, you're going to ask them to release your levy. Now 99 times out of 100, they're going to say, no, I'm sorry, I can't do that. Your case is with ACS. And so they're going to then direct you to a special bank of telephones at most taxpayer assistance centers, and they're going to have you pick up the hotline, so to speak, to ACS. The wait will usually be much shorter, so that saves you some time right there. Then you're going to talk to the ACS agent who picks up the phone, and you're going to go through the same process that I'm about to describe here. When the ACS person says that they haven't secured all of your tax returns, you say, oh yeah, I asked the person at the window to notate that they received the returns. I forgot to say that a minute ago. But when you give them the tax returns, if they've been filed, ask them to notate in the computer that they have been secured. Now the ACS person might actually give you a bit of a hard time and tell you that that's not the appropriate way to file a return and you should always use a service center and they can't help you and so on and so on. If they refuse to help you, say thank you very much, hang up, and pick up the phone, pick up another phone, or wait 3 minutes and pick up the phone again. You're going to get a different person, and you guaranteed will get a different answer. It's been well documented that IRS employees give out the wrong answer or incorrect information over the telephone over 60% of the time. So when I tell you to hang up and call back, it's not because I'm trying to be trite or a smart aleck. It's because it's actually a tried and true strategy. You're going to get a different answer most of the time when you call them back. So you're going to ask the person to have put it in the computer, and that way you should be able to overcome that objection with ACS that you haven't filed your returns. Now let me show you how to find your local Taxpayer Assistance Center. Again, you go to the IRS website, and it's irs.gov/localcontacts/index.html. Don't ask me why they have such long addresses, and you'll see a map of the United States. So if you lived in Kansas, for example, and I picked Kansas because it's smack dab in the middle of the country, then you'll see a listing here of the 3 local taxpayer assistance centers in the state of Kansas, exactly what their addresses are and what their telephone numbers are. I don't necessarily recommend calling them. I don't know what it is you're going to accomplish there, but that's how you find your local taxpayer assistance center. Now, if you find yourself without any records and you want to know how you can still file your returns, there's a little secret. If you're self-employed and the IRS doesn't have any record of any income reported, that was paid to you, then you're going to have to prepare your returns based on your best estimate of earnings and your deductions. Now, you need to remember that the IRS doesn't require that you provide documentation for your tax return unless you're audited. Now, that doesn't mean we want you to prepare bogus returns or unrealistic returns, but you do not have to have the documentation in order to just file the return. Now, if you do prepare what's known as an estimated tax return, you're going to want to attach some sort of statement that indicates that these items were estimated and you prepared the return to the best of your ability. And I have not seen a very high rate of audit for returns prepared in that manner. One of the things you can also do if you're self-employed and or a wage earner, and you know that you've received a 1099 or W-2 in the last several years, is you can actually call the number listed on the notice, and you can ask them to send you your payor information. What that is, it's your W-2s, 1099s, 1098s, that type of thing. They only have it for the last 7 years. So, that's really important that you ask for that, and that will take about 2 weeks to be sent to you. I wish there was a way in order to get it faster, but there's not. Years ago, we would have our clients go to the local Taxpayer Assistance Center, and on an emergency basis, they would be able to retrieve copies of their payor information. Well, I kid you not, one day the IRS came out with an announcement, and they said, in order to provide better customer service to taxpayers, we have ceased providing this service at local Taxpayer Assistance Centers. Now, that doesn't sound like more service to me, it sounds like less, and you can bet your bottom dollar that that was actually a tactic that was carefully thought out, because they knew that if it took longer to get the payor information, it would take taxpayers longer to file their returns, and that the IRS would ultimately collect more money from levies if they did so. The IRS also could have prepared what are known as substitute for returns. That's how some of you will actually have tax balances for years, usually high balances for years, that you are positive that you never filed a tax return. It's not uncommon for someone who have earned $50,000 in a year to show me a bill from the IRS for that particular taxpayer showing they owe $40,000 or $50,000. And some of that's due to penalties and interest that have accrued over the years, but not always. A lot of times what the IRS has done is they've taken a gross 1099. So let's say you're a truck driver and you've got a 1099 for $200,000. Pretty good money, right? Well, not really, and this is why. It's very expensive to run a truck. And so it wouldn't be unheard of for a long-haul truck driver who got a 1099 for $200,000 to have paid $170,000 out in expenses. But see, if you fail to file, the IRS prepares that substitute for return. They take the $200,000, they give you no business expenses or deductions at all. They give you one exemption, yourself, one dependent, yourself, and they prepare the tax. And so the tax on that $200,000 tax, or that $200,000 1099 could easily be $80,000 plus interest and penalties. And so that's kind of an unenviable position to be in, but I wanted you to know that's how the IRS can come up with a number that for a return that you never filed. So you're on the phone with ACS or a revenue officer and you do have a plan, right? Because if you don't have a plan and you call either one of these offices, you're dead in the water. There's virtually no way that you're going to get your wage levy released. That's because IRS employees typically are not problem solvers. They just want to get paid. They're not there to help you. They're there to collect money for the United States of America, and they're not there to figure out how they can release the levy. They're there to figure out how they can prevent that levy release from happening. And here's what happens on a typical ACS call. Service Center, the ACS person will say, "Darn it, pay everything now. Pay us yesterday." And you'll say, "Well, I can't really do that. I don't have any money." And that's when the bargaining begins. So you have to know what options are available to you. So if you're dealing with ACS, they're most likely going to require you to submit a Form 433-F and the supporting documentation. A 433-F is a form that's it's called a collection information statement. It's basically an income statement. So let's take a look at that particular form right now. I want to point out that all the forms that I mentioned in this presentation can be found at getirshelp.com/DIY. The DIY stands again for do it yourself. So we're going to scroll through these various forms that we have listed here, and we come to the 433-F. The 433F is a form, again, that is typically only used by the ACS, and it actually differs dramatically from forms in use by other IRS divisions and offices. In fact, the other offices won't take a 433F, and ACS won't take anything but a 433F. So let's increase the size on this thing a little bit. And that's actually a 433F. Come to think of it, that is an older version of the 433F. By the time you get this video, that will be corrected. The new form is very similar to the old form. It just asks for even more information, including your driver's license number, and asks for more documentation. So when you have a wage levy, you kind of have to figure out, how am I going to ultimately solve this case? And you have 6 options. You have an installment agreement, which is nothing more than a payment plan. You're probably familiar with that. It's where you pay some amount of money every month to the IRS until your liability is paid or your collection statute expires. I'll explain what that means in just a minute. There's an offer and compromise, and an offer and compromise is a deal where you can make a deal to settle for less with the IRS. There's something called currently not collectible, or sometimes we'll call it hardship status. If you really want to freak out IRS personnel, tell them that you want to be placed in status 53. That's their internal lingo, and if you say that, they're going to think that you know what you're talking about. Sometimes it really freaks them out, and they want to know if you used to work at the IRS. So whether or not you want to use that term is up to you. There's something called innocent. Well, let me back up to hardship status. Hardship status is normally not a total solution for an IRS problem, but it is a total solution to a wage levy, and that's why we brought it up here. Penalties and interest will continue to accrue until you either pay or the collection statute expires. Innocent spouse is the 4th option. Innocent spouse is where you make a claim that your spouse, usually your former spouse, is actually responsible for the tax in some way. If you file an innocent spouse petition, expect to wait a couple years before you get an answer. They probably will not keep a wage levy on you while that's pending, nor will they keep the wage levy in place typically if you file an offer and compromise. So if you can get an offer and compromise together and file it, typically once they consider it processable, which means all the paperwork has been filled out, then they'll release your wage levy. We've used that technique on many occasions successfully. The 5th option is actually bankruptcy. A lot of people don't know this, but bankruptcy can be used to discharge taxes in bankruptcy. And the last one are the collection statute expiration dates. We'll get into that in more detail in a minute. An installment agreement, there's basically 2 types of installment agreement. There's a simple installment agreement, also known as a streamlined installment agreement, and that's if you owe less than $25,000. If you owe less than $25,000 total, typically what you can do is take that total amount, divide it by 60 months, add a little bit for interest, and the IRS will typically accept your installment agreement amount and release your wage levy. They're not supposed to ask for any financial documentation either, because that's why it's called a streamlined installment agreement. It's there to streamline the process and make it easy. Oftentimes, IRS employees will continue to ask for financial documentation even when you're in a streamlined installment, or when you make a streamlined installment agreement request. So your mileage may vary. It's up to you whether or not you want to provide that information to the IRS or not. There's next, or the streamlined installment agreement can actually be very useful when you have certain things that would normally be disclosed on a financial statement that you don't necessarily want the IRS to know about. I can't really elaborate any farther than that, but just if there are things that you don't necessarily want them to know about, and you can get a streamlined installment agreement without providing documentation to them, that can really be a benefit. The next type of installment agreement is a complex installment agreement. A complex installment agreement is pretty hard to work out. That's why I've declared that it should be called a complex installment agreement. What that means is really any liability that exceeds $25,000 in total for any number of tax years. And the way that the IRS then calculates your payment is this formula. They take your monthly gross income, they take out your monthly allowable expenses, And then the difference is what they are going to declare should be your installment agreement amount. So let me give you an illustration. If your monthly gross income is $10,000 and your monthly allowable expenses are $6,000, the IRS is going to propose that you pay them $4,000 a month in your installment agreement payment. So the name of the game there becomes, how do I increase my allowable expenses and therefore bring down my ability to pay? That ability to pay number, the $4,000 in the illustration I just gave you, we call monthly disposable income, and that'll be important in a minute. There's something that are known as national standards, and this is how the IRS determines what your, quote, allowable expenses are. And they will use them when they look at your 433F, your 433A, or your 433B. Now, up until this point, we've only been talking about the 433F. Let me explain what 433A and B are. If you deal with any division of the IRS other than ACS, then you'll be using a collection information statement, a Form 433A. It's about 6 pages long, and it is used for wage earners and self-employed individuals. Now, if you have a corporation, in other words, not a sole proprietorship, so a corporation, then you will also have to fill out a Form 433B. That's a collection information statement for businesses. But if you're a wage earner, or if you just get a 1099 and you're a sole proprietor, then you can use just the 433A. Those forms, again, are available on irs.gov and getirshelp.com/DIY. Now, you need to locate the standards for your expenses and learn how to fill out these forms correctly. If you don't, it will not be in your best interest. So I'm going to take you now to the page on the IRS website where you can find the collection financial standards. And so take a good long look at that URL. I'll go ahead and read it slowly. It's www.irs.gov/individuals/article/0, ID equals 965-430, 00.html. A simple way to do this, or to find this, would be to go to the IRS homepage and just see this search box right here in the upper right hand corner. Just type in the phrase collection financial standards and it'll take you right to this page. So that's much easier than actually trying to figure out that crazy URL. You can see from this form, or this page rather, that these are the collection information standards. Now, what happens is national standards, that phrase technically only refers to food, clothing, and other items. So if you go to that page for national standards, you can see that the IRS has recently created national standards for people across the United States. People in Alaska and Hawaii actually typically get a little bit more money, but these national standards indicate how much you're allowed in total for food, clothing, and miscellaneous items, depending on how many people reside in your residence. If you have more than 4 people, then you take that $1,370 and you continue to add $262 until you reach the total number in your family. There's also something that's rather new. There's an out-of-pocket healthcare standard, and that's a pretty easy number. If you're under 65, you're entitled to $57, and if you're 65 or older, you get $144. Now, it's important to note that actual out-of-pocket healthcare is an unlimited expense. What that out-of-pocket on this page is talking to over-the-counter sort of medications. It's talking about prescription drugs as well, but this is the number that they will not argue with you about. So $57 or $144, they will not require documentation to prove that up. But if you have prescription medication and or health insurance and or doctor copays and or vision care and that sort of thing, then health care is actually what is known as an unlimited expense category. If you're paying $1,200 a month for health care because you have health insurance and 4 kids and high doctor bills, then you're going to be able to take $1,200 a month. So do not be intimidated in thinking you're only allowed to have $57 a month if you're under 65 and $144 if you're over. The next category is something called local standards for housing and utilities. Every county in the United States of America has a maximum housing allowance. That covers your housing, utilities, taxes, and homeowners insurance. So we're going to click this link here, and you can see each state is listed. We'll go ahead and pick on Kansas again. Go to Kansas, scroll down, and you can see here that in Allen County, Kansas, housing and utilities for a family of 1 is only $684. Housing and utilities for a family of 5 or more are a whopping $959. So if you're sitting there and you live in Manhattan and you're saying, what? There's no way I can ever get by on that. Well, there is some hope. Let's check New York. You're still going to say the same thing, but in New York at least, it's much higher. So I wanted to show you sort of a low number and a higher number. In New York County, which is Manhattan, the maximum housing allowance for one person is $3,687, and the max housing allowance for a family of 5 or more is $5,451. Now these numbers are intended to be guidelines. They're not. Congress has indicated that these are not written in stone, and that these shouldn't be held over taxpayers' heads as if they're definite numbers and concrete. As a practical matter, they do that, but you may be able to argue that your higher expenses should be allowed. For example, if you have someone in your household who's disabled and it costs more to live in a particular place because of that disability, you might want to argue that. The next financial standard is the transportation standards. These vary a little bit around the country as well. Now there's 2 different transportation expenses that come into question here. 3 actually. There's public transportation, and so if you take public transportation, the maximum is $163. Now that may or may not be realistic depending on where you live. Here in Tampa, Florida, I think there's a bus pass that's available for around $80 to $100 a month, so that would work. You would take the $80 to $100 a month, whatever you actually pay. The second type of cost for transportation are ownership costs, and this is a national number. It's based upon your car payment or your lease payment for your car. This number is a maximum number as well. So right now, if you have 1 car, you can have a payment of up to $489 per month, and if you have 2 cars, you can take up to $978. The third transportation costs are what are known as operating costs. Operating costs vary depending on the metropolitan area that you live in. So you can see here that the cost to operate a car in Boston are not as high as the cost to operate a car in New York. Now, for some reason, these numbers went down in recent years, not up. And everyone in the IRS understands and agrees that these numbers are ridiculous. However, they probably will hold you to these standards. Right now is a good time to be arguing that you should be allowed higher numbers because gas is very expensive and your insurance bills haven't gone down either. So if you actually exceed these numbers, you should go ahead and try to claim numbers in excess of these figures. You can find out if you belong, what metropolitan area you belong in by continuing to scroll down this page, and you can see what metropolitan statistical area you belong to. So for example, if you live somewhat near Philadelphia, this tells you right here that if you live in Chester County, Philadelphia, that you're part of the Philadelphia MSA, and you can use the Philadelphia numbers instead of the generic Northeast numbers. If you live in Newcastle County, Delaware, it's the same thing. So those are where you're going to basically get the figures for your 433F or your 433A. If you need to do a complex installment agreement, if you're dealing with a revenue officer, again, you're going to fill out a form 433A and a 433B, and you're going to have to provide the documentation that's requested on those forms. If you're dealing with ACS, you're going to fill out a form 433F and provide the documentation listed on the 433F. I would suggest that whenever you mail documentation to the IRS, and I would always encourage you to mail documentation to the IRS instead of using a fax machine, because if you fax it, there is no way that they're going to receive all of that documentation all in order. Many times they're asking for 50 pages worth of documentation, and what do you think the odds are that all 50 pages are going to come through the fax machine in one pass, be collated correctly, and be transferred by a clerk whose job it is to watch the fax machine to the person who's dealing with you on your case? Not very likely. So skip the fax machine altogether unless you're talking about just a few pieces of paper, and send the IRS this information via certified mail. My experience says that if you don't send things to the IRS via certified mail, they go in the trash. The only exception is, of course, if you mail them a check, a 42-cent stamp seems to work every time. So you're going to use certified mail. If you want it to get there faster, go ahead and send it by express mail. Express mail also has a tracking device associated with it, a tracking number, and so that's fine too. We don't have problems typically when we send correspondence to the IRS via certified mail. If you send documentation to the IRS, make sure that it's complete, that you haven't left anything out. You are not going to get a wage levy released if you don't supply complete and thorough documentation. The next collection alternative is the offer and compromise. If you're going to file an offer and compromise, again, you're going to use that Form 433A, and you're also going to use a form called a Form 656, and you can follow the directions on the Form 656. Basically, the documentation required to have a wage levy release is contained, or is also required, rather, for an offer and compromise. One of the big differences are you're going to mail that offer and compromise to one of two addresses, either in Memphis, Tennessee, if you live west of the Mississippi, or Brookhaven, New York, if you live east of the Mississippi. And you're going to be required to pay a $150 filing fee and a 20% down payment. If you actually enter into if you are requesting something other than a cash offer, so if you're asking for a monthly payment sort of offer, that really exceeds the scope of this presentation here, but if you're looking to make monthly payments to pay off your offer and compromise, you will also need to make those monthly payments along with your offer submission and until your offer is accepted or rejected. If you're making a cash offer, you don't need to make any payments beyond the 20% down payment. If you're making a monthly payment offer, you do not need to make a 20% down payment. Now, the next option is something called, that I told you before, is called currently not collectible or hardship status. Again, you're going to need to use a Form 433A or Form 433F, depending on who you're dealing with. And I know I sound like a broken record, but that's because these two forms are really the backbone of the IRS collection process. They give the IRS employee the roadmap to know where to collect from you in the future, so it tells them all of your assets and all of your income sources. But it also tells them what their opinion of monthly disposable income will be. So you need to fill these out very carefully with a lot of thought, because you're going to have to probably live with the numbers that you put down. You can actually be placed in currently not collectible status if your allowable expenses exceed or match your income. So if after you get done with the collection statements, it shows that you have zero, exactly zero, which is kind of rare, or you have negative $50 a month, then they're going to agree and place you in hardship status. They can do that over the phone. The next option is innocent spouse. Innocent spouse relief, there's basically three types. There's classic innocent spouse relief, where you're basically arguing, I didn't know that my spouse owed this money, he or she kept it from me. The second is called equitable relief, and essentially that argument is although I knew about it, it's really unfair to hold this against me. And the third is called separate liability election. And what that means is, although we filed a joint tax return, you should separate what I owe versus what he or she owes, and I'll pay my share and he should pay his share. Okay? And you use Forms 8857 and Form 12510 to file for innocent spouse relief. You can expect to wait a couple of years for that relief to be granted. Typically they would release your wage levy, and then you would have a collection hold while that petition was pending, just like you would receive a collection hold while the collection or the offer and compromise was pending. The collection statute expiration dates are very interesting. A lot of people don't know this, but the IRS actually has a 10-year statute of limitations for collection of tax. They cannot collect if 10 years has passed since the tax was assessed. Now in English what that means is, if you file a tax return, or the IRS files one for you, or you go through an audit and they assess you a bunch of extra tax, then they have 10 years to collect that tax from you. If they don't do it within that time, they have to write it off, and you win, they lose. Of course there's exceptions to this rule, and of course there are things that you can do that actually extend the collection statute expiration dates, but by and large the general rule is that you have 10 years. So if you know that it's 2008 and you have a 1992 tax liability that is still outstanding, it is going to be in your best interest to try to figure out how much of that 10 years is still left over. Now you might be asking yourself, well, how in the world, if there's a 10-year statute, can a 1992 tax year still be open in 2008? And the answer is simple. If the person waited until 1999 to file a 1992 tax liability, then the tax or the collection statute did not begin to run until 1999 and therefore would not expire until 2009. But it's important to know that these collection statutes exist. You can actually use your IRS transcripts to locate the exact date of your expiration. What you need to do is, instead of asking for payor information, like I advised earlier to get your W-2s and 1099s, you need to ask for what is known as a record of account. A record of account, you'll get one for each tax year in which you have a balance due, and even many tax years that you haven't filed, and it'll tell you whether or not you filed a return, what the assessment dates are, and so on. Now, if you look at a transcript and it shows that you filed a return, or the tax was assessed on January 5th, 1999, and there haven't been any bankruptcies, offers in compromise, and so on, then you can fairly well bet that your 10 years will expire on January 5th, 2009. That takes us to bankruptcy. Almost every day, taxpayers come in my office and say, but I thought you couldn't discharge taxes in bankruptcy. And then I have to tell them that they're wrong. About 90% of bankruptcy lawyers in this country will actually tell you that taxes cannot be discharged in bankruptcy too. And that's really a crying shame. There's actually 5 rules. There's 3 that you really need to know about. The 3 rules are that the tax returns have to have been filed for at least, the tax returns have to have been due for at least 3 years, and this includes extensions. If the returns were filed late, then the returns have to have been filed for at least 2 years. The taxes also have to have been assessed for at least 240 days. If you meet all 3 of those rules, then you are eligible for a bankruptcy based on timing for your taxes. So you may want to consult a bankruptcy lawyer. The other 2 rules that aren't listed on the slide are that there cannot have been any fraud or willful evasion of the tax. Those rules don't come into play as often, but they're important that you know about them. Now, if the IRS says no, don't give up. And it's going to be fairly common for you, at least dealing with ACS, and really with a revenue officer, for them to say no at the beginning. So you can either comply with whatever additional demands they have, usually for documentation, or you can go and you can file an appeal or a Form 911 with a taxpayer advocate. Now, the taxpayer advocate's office, there's actually local TAS offices all throughout the country, and you can go to the IRS website and use that search box in the upper right hand corner to search for taxpayer advocate, and it will give you a listing, take you to a page with a listing of your local taxpayer advocate offices. Every state has at least one taxpayer advocate office. And typically what you're going to do is download Form 911 from the IRS website and fill it out. Now, it's a 3-page form, but the first page is the only page you need to fill out. But you're going to need to fax all 3 pages to the IRS. I don't know why, but that's what they want you to do. The fax numbers will also be available on those local taxpayer advocate pages. If you fax the Form 911, which stands for emergency, I think that's kind of cute, then someone from the taxpayer advocate's office will call you, usually within a couple days. The advantage to this is you'll actually have a single person, an individual, who's there to help you with your particular case, and there's no fee for this. Now, they can't work magic, but they can cure bureaucratic snarls and snafus, so don't underestimate their abilities. So if you feel like you've been receiving the runaround from ACS or a revenue officer, don't be shy about filing a Form 911. The taxpayer advocate will actually contact that person on your behalf and will attempt to clear the logjam and get your levy released. They're going to ask that you fill out a Form 433F or a Form 433A and provide documentation regardless if you've already done it in the past. So if you want their help, you need to comply with that request. Again, certified mail, express mail, some trackable way. Do not fax it to them unless it's a very small amount of paper. If you do fax it to them, you're going to want to go ahead and call them within a reasonable time after you fax it to make sure that they received it and that they acknowledge that they got it. Now, if the Form 911 doesn't work, then you have a right to file what's called a Collection Appeal Program Appeal, also known as a CAP appeal. Now, in order to file a CAP appeal, you need to have had a conference with the group manager before you file the form. Now, the group manager is the boss of the person who handles your case in the field. Now, in the case of a revenue officer, it's rather simple in order to get on the phone with a group manager. You simply need to ask. They're not always available, but they'll definitely call you back. you have a conference with the group manager over the phone. You say, hey, group manager, I want him to release the levy, and these are the things that I've done. What do I need to do to get this wage levy released? And the group manager will either tell you what you need to do or disagree with you. If the group manager just disagrees and refuses to release the levy, then you're going to file a Form 9423 by fax to the group manager, and within a couple days to a week, you're going to get a call from someone from IRS Appeals. I like to deal with IRS Appeals because they're better educated, better trained, and have much more discretion. And so they're a dream to work with as compared to a revenue officer or ACS. So you're going to want to deal with IRS Appeals if there's any way possible. Now, if you're dealing with ACS, getting a cap appeal is a little trickier. It's the same laws, or it's actually the same rule. It's actually not a law that they give you a cap appeal. It's just a policy, and it's in the Internal Revenue Manual, and therefore the IRS believes that it's gospel, and they follow the Internal Revenue Manual whenever possible. So when you deal with ACS and you disagree, which will be roughly 90% of the time, you can ask to speak to the group manager. Now the group manager is always in training. I'm not exactly sure why. Maybe because they need it. Okay, that was a little joke. Now, you're going to ask to speak to the group manager, and they're going to tell you, no, I'm sorry, my manager's unavailable. He or she is in training. So then you're going to leave your number and ask them to call you back. In some cases, they may actually call you back. I've had it happen where they call me back. In most cases, they will not call you back. If they won't call you back, what do? You guessed it, you call ACS again, try to get a different person, try to get a different answer. If you still lose after you filed your cap appeal on your 911, your 911, then it might be that your income versus your expenses is out of whack. So you can ask the IRS for a partial release of your levy. So let me give you an example. If they're taking $1,000 a month out of your wage levy or out of your paycheck, and your monthly disposable income is $500, so in other words, they agree that you can only pay $500. Well, $500 is better than $1,000, so you're going to ask them for a partial release. They will usually do that. Now, why you would get a partial release and not a levy release with an installment agreement is a challenge, but I just wanted you to know that it's available. If you still can't get that done, then you're going to want to seek the assistance of an attorney or a trained professional to try to see what it is that you missed. Now, we're going to go over real quick what we just learned. What were the requirements you have to satisfy to obtain a release? Well, you have to make sure that all of your returns for the past 7 years are filed, and you have to provide the IRS with completed collection financial statement and supporting documentation if needed. So the 433F, the 433A, and the 433B if required or if necessary. We also told you that you would learn how to get your wage levy released almost immediately after the IRS agrees with you. So what are you going to do there? You're going to make sure that you get the contact name and the fax number of your Human Resource Department so that they can get a wage levy release faxed. We told you that you would learn how to get your tax return information from the IRS even if you haven't filed in years. So the way you're going to get that is you're going to call the IRS and you're going to request your wage and income transcripts, also known as your payor information. You're going to be able to locate your old tax forms on www.irs.gov or getirshelp.com/DIY. Print those out and you can complete the returns. Then you're going to go to your local Taxpayer Assistance Center, and we showed you how to find that, and you're going to go ahead and file those returns over the counter. You're going to take out an original and a copy so that you can get it date stamped. That's how you're going to learn. That's how you're going to get your returns accepted by the IRS almost instantly. Remember, we said go to the local Taxpayer Assistance Center and hand them over the counter, ask them to release your levy, and then get on the hotline to talk to ACS. Incidentally, if you have a revenue officer, the way to get your returns accepted almost instantly are overnight them to the revenue officer. That's as instant as we can get in this particular case. I suppose you can drive out to the revenue's office, or you can have the revenue officer come by your house or your place of business, and they will accept your returns at that point in time. We promised that you would understand what forms you needed to fill out ahead of time, and we talked about the 433A, the 433B, and the 433F until you're tired of hearing those. But we also explained how do you use the national standards to your advantage, and we showed you that all agreements with the IRS depend upon your ability to pay, using the difference between your monthly income and your monthly allowable expenses, which creates the monthly disposable income number, which is what the IRS is going to want from you. We talked about what documentation you should have available when the IRS asks for it. They're going to want 3 months of bank statements. They're going to want proof of all your monthly expenses, including your mortgage statements, rental, car statements, etc. They're going to want 3 months worth of paycheck stubs, proof of the value of your assets, and a list of these items is provided on the Form 433A, the Form 433B, and the Form 433F. If things still don't go right, you're going to call the Taxpayer Advocate Service. You're going to ask to speak with the group manager, and you're going to fill out a Form 9423 Collection Appeal Program appeal if that doesn't work out. Now, earlier in the video, I talked about a Form 12153, and that was to be filled out if you receive a final notice of intent to levy. Now, Form 12153 is used to request what is known as a collection due process hearing, and it's an appeal. It sounds fancy. It sounds like there'll be a hearing in a courtroom, when in fact, you'll just have a telephone conference or sometimes an in-person conference with an IRS appeals officer. Now, if you get a final notice of intent to levy and 30 days have not passed, you can file what is known as a timely request for a collection due process hearing, and the IRS cannot levy on those years listed on the final notice. If you have gotten a final notice and it's been more than 30 days but less than 1 year, then you can file that same form, the Form 12153, and you can receive what is known as an equivalent hearing. Now, if you file an equivalent hearing request, the IRS is not required by law to cease levy or cease collection activity, but they typically will release your levy if you request an equivalent hearing. So it's really important to do that. If you're in a last-ditch effort and you don't know what to do, and none of these things have worked, you might consider downloading a Form 12153 and filing for an equivalent hearing request. Even if you think it's been more than a year, it can't hurt. So think about doing that.
So there you have it. That didn't hurt much, did it? You now have the knowledge that you previously lacked before you watched the video. So use what you just learned, get your wage levy released, and get your life back. I'm Darrin T. Mish. Thanks for watching.